Can you imagine spending over 50% of your monthly mortgage payment on taxes and insurance? Because that's exactly what's happening to more and more metro areas. In fact, if you live in Rochester, New York, you probably know about that. But it's not just, because of being in New York. Miami's on the list too, which is probably no surprise at all. One of the things that's happened is in the last decade, we have had a higher and higher percentage of your mortgage payment going towards the taxes and insurance, the escrowed component of your payment. Now, this survey that was done was only taking into account, obviously, the people with mortgages, right? And if you think about it, it kind of makes sense that that's going to be rising because the prices keep rising. So obviously, as prices rise and interest rates rise, the payment is going to go up quite a bit. But your taxation is based on the price that you purchased at. So that's going to go up. But really the biggest thing, at least for Florida, why this is happening is that there's a big increase in insurance. Insurance rates have gone through the roof. It's been, pretty much unreasonable. If you ask anybody who lives here in Florida, and I am in Florida, I'm in Sarasota, Florida. Also, my name is Maciek Zaremba. If you have any questions about the real estate market, I am a realtor. I'm licensed since 2004. I invest into small multifamily too, so just reach out, give me a call, so we can chat about whatever questions you have. Anyway, this is actually a very alarming thing because as people can't afford homes because of the prices staying high, now they have to worry about higher taxes and higher insurance. And the reality is going to hit one day where the demand is going to be so low for actual housing. And someone did say, I don't know whose quote this is, but they said, you're going to own nothing and you're going to like it. And I kind of see that happening with real estate. It is going closer and closer, very slowly, by the way, to this reality of it's just too expensive to own. So you're going to have to go and rent. Personally, I don't like that idea. I've never rented. I've always owned ever since my early 20s. But let's look at the grim reality for some people, because it's not just over 50% of your payment. Some areas, over 50% of the mortgages in the entire area are in this situation where they're paying over 50% of the mortgages. But now you should know about some of the metro areas that are notoriously bad with that. That means that they have really high property taxes and or really high insurance, whichever one it is, or maybe a combo of both. So let me read off a quick list in the US of metro areas where a very large percentage of people have a larger escrow payment than they do a principal and interest payment, right? You definitely want to kind of stay away from that if you can. So first of all, Rochester, New York has 35% of all the mortgages out there have a higher payment on the escrow component. Next one is Syracuse, New York. So New York takes the lead on the top two. But after that, it goes to Omaha, Nebraska. There's only 26% of all mortgages. Then New Orleans, Louisiana, and then the Miami, Fort Lauderdale metro area, which is obviously here in my state. It's about 3 hours away from where I am. But I'll tell you that over there, the insurance rates are very high. Well, here as well. But really, the valuation of the homes is so high, and the property taxes combined with the insurance just really makes it very, unaffordable to live there. It is a very high demand area. It's a very large area as well. But let's keep going. Over there, by the way, 25% of all the homes, all the mortgages have what I'm talking about, a higher payment towards their escrow. Next is two Texases. We have McAllen and then El Paso. Then we have Houston. After that, we have Buffalo, New York, and New Haven, Connecticut. So as you can tell, we kind of have, New York and Texas taking the lead here with quite a few areas where your payments can be so high. But this is not to say that you can't afford to live there or you can't find a property that has lower payments. Let me give you an example of something that you can look into. When you go and buy new construction, whether it's new construction like a community build out or a spec home. It doesn't really matter. Really, it's not even just brand new construction. It could also be, homes that are like, let's call it under 5 years old, right? So those homes are built to some of the latest building codes. And let me tell you, insurance loves that, okay? Insurance loves the fact that you have all the latest and greatest wind mitigation credits. In Florida, that's what we deal with. We deal with hurricanes and so on. So we have a lot of discounts available. So if you buy a new construction, you're going to have two benefits in Florida. First benefit is you're going to get the lowest insurance rates you can get because every carrier out there wants to write policies on your home. Okay, now if you buy a 1960s, 1970s home, forget about it. Wood frame home, forget about it. Anything in a flood zone, forget about it. You're going to have very high rates of insurance. But these new construction homes, I'm telling you, that's where it's at, okay? That's where you're going to get a pretty low ratio of principal and interest to escrow. Also, in Florida, when you get a new construction home and then you file homestead exemption because you live there, over time what's going to happen is that your property taxes are, they're still going to go up, but they're going to be capped at how much they can go up. And quite frankly, they will go up every single year, okay? You might have an anomaly year where it doesn't, but you're going to be really happy that you have homestead exemption because we have the Save Our Homes amendment. Basically, homestead is basically incentivized to have lower property taxes. And over time, if you do that, you won't be in this scenario where your mortgage payment is going to be 50% or more of your total payment for your mortgage. Okay, your escrow payment won't be more than 50% of your mortgage, is what I meant to say. And right now, I know that this statistic looks so bad, but hear me out on this. It's going to change quite a bit. Okay, first of all, we have a new president-elect, right? Donald Trump is, he kind of promised on his campaign trail that interest rates will go down. And how does this affect what I'm talking about? Well, very easy. It's about your principal and interest payment. That thing is going to go down. If interest rates, within 2 years, let's say, go down to 4% and you can refinance your home to 4%, then your payment of your principal and interest is going to go down. Your overall payment is going to go down, and your property taxes and insurance, well, they'll keep ticking up slowly but surely. Okay, so you might be in that scenario where more than 50% of your payment is towards your escrow. But even if the plan that Trump said he's going to do, which is lowering interest rates, even if that doesn't happen, let's just say interest rates stay at 8% for the entire duration of his 4-year term. If that happens, well, prices are probably going to go down slightly for homes, but the payment is pretty much going to stay high. Right? So now you're not going to be in this position where half of your payment goes towards principal, goes towards your escrow account. Now, if you're a seller who's thinking about selling, how does this affect you? Well, it honestly doesn't. All you have to worry about is what's the supply of the homes that are like yours. What's the competition, basically, is all you're assessing. And then how many people are out there buying, which you're trying to look up the absorption rate of the local market. Check out the days on market, because whether insurance or taxes go up, that shouldn't really concern you too much. But if you're going to stay in the same state and you're going to sell and then you're going to buy, or even the same city, then you want to look into, your homestead portability, which a lot of people don't even know about, but you can transfer your homestead exemption to your new home, okay? And then you want to look into the insurance rates prior to purchasing. So make sure to do that during your inspection period. You want to make sure you're getting a lot of discounts for wind mitigation credits and from your 4-point inspection, because maybe this home that you just absolutely love that you're going to be buying doesn't have the safety precautions that insurance wants to see, and therefore you might get dinged for a higher insurance rate. Hey, I hope this has helped. If you like my videos, you want to hear more about real estate, please consider liking, subscribing, commenting. I answer pretty much every comment. Thanks.